The U.S. added more private sector jobs than expected in March, according to the latest ADP data. This coming after the BLS reported fewer job openings in February. So what does this data really tell us about the health of the U.S. labor market? Joining me now is Kathy Bostjancic. She is the chief economist and senior vice president at Nationwide. Kathy, thanks for being here. So we've got some hints here that we can use perhaps heading to Friday's jobs report. But what are the data that we've gotten thus far? What is it telling you?
Yeah, hi, happy to be with you. It's telling us that the labor market, as of now, is still in very good shape and healthy. Along with the ADP numbers, we've seen jobless claims every week remain incredibly low. And we think that, on Friday, we'll get a solid payroll advance, probably somewhere around 130,000. And we think the unemployment rate stays quite low at around 4.1%. So, as of now, labor market remains strong. And that's really good news because it does give the consumers income wherewithal to weather some of the higher prices that will be coming through, with the tariffs.
The JOLTS survey, right? The job openings number ticked down a little bit. We've seen layoffs tick up a little bit. Any warning signs there yet?
So, we're watching it very closely. The JOLTS data, as you mentioned, did pick up some of the increase in layoffs, particularly with the federal workers. But it's still rather contained. I think some of that effect's probably going to be felt more as we get through towards the latter part of the year. Some of these workers are on deferrals, and most are increasingly reading that some are being offered jobs in the state and local government sector. So that's very encouraging. But obviously, as the economic activity, as we think, slows, and it's become bumpier, right? The first quarter growth is essentially stalled. And we think you do have those headwinds from the tariffs. And let's not forget that we were already, most of us, and we certainly we're looking for some moderation in economic growth because the last couple of 2 years were way too strong to be maintained. But fundamentally, underneath of it, labor market, consumer still looks healthy to us.
And Kathy, we tend to talk about jobs as a lagging indicator, right? That they slow more slowly or with a lag to what happens with economic growth. How should people who are watching the job market think about that? What's the typical lag and how does it usually sort of play out?
Yeah, that's a great point. I would say the unemployment rate is a lagging indicator. And that could be, several months to maybe 6 months of a lagging indicator. The establishment, the payroll data that we get as well, I would say call that more coincident. And that's a reflection, what's the labor market now? And it really becomes coincident because we'll get that data on Friday and then we'll look at the wage growth and we'll make an estimate of what we think personal income growth will be for March or any given month. And then we can project, okay, that's going to support or maybe hurt consumer spending in the current month. So it becomes a very coincident indicator in that sense. But yes, the unemployment rate tends to be a lagging. That's because you have changes in labor supply. So it's not just the number of people employed, but it's also the number of people coming into the labor force, looking for a job.
And all of this brings us to the payroll report, which you mentioned, which is on Friday. Any parts of it that you're going to be paying a special attention to?
So we'll try to, digest all of it, to be honest, all really important, but particularly we'll focus in on what we think is like the core portion of private payroll growth. And that particularly, will get you zeroed in on the services, and we may even look at services ex healthcare and education. Not that healthcare and education don't matter, they certainly do, but we have seen those consistently grow. They're kind of secularly growing. So maybe looking at the private sector ex those will be important. Of course, looking at the federal government, seeing how employment is playing out there, but keep in mind that, the other half of employment in the government sector comes from state and local. So there can be, that offset and balance there. And then lastly, I would say wage growth, that really matters a lot. It determines income for consumers, but also gives the Fed some sense maybe of how inflation pressures are playing out, whether the labor market's too tight or easy. I think at this point, though, the Fed's probably more worried about prospective slowing than necessarily wage pressures.
Right. It does feel that way. Kathy, thank you so much. Appreciate it.
My pleasure. Thank you.